Awesome. Welcome, everyone. Thank you for joining us. We're a little bit past the midway point of our Road to Recovery webinar series. Today, we're going to talk through my favorite topic, as my background is finance. So intro to financial planning for entrepreneurs. We're going to start with some kind of foundational things as far as financial planning and setup, and then take a break because people could register for all or part of this presentation. So we'll take a break about 45, 50 minutes in for about 10, 15 minutes or so. And then at 3:20, we'll start with the second part, which is on finding funding opportunities. We are very, very grateful to have Jerry. I always mess up your last name. Pronounce your last name for me.
Aglipai.
Aglipai, joining us from the Small Business Majority. Jerry will tell us in a minute a little bit more about Small Business Majority itself and a little bit about her background, but this is in partnership with the Illinois SBDC at Bill Bronzeville and also the Illinois SBDC at GCDC, or Greater Englewood Community Development Corp. I'm Lauren. I have a bad habit of not saying who I am. I'm Lauren. I am the director for the Illinois SBDC at Bill Bronzeville. So with that, I will turn it over to Jerry. A couple of housekeeping notes. If you have any questions as Jerry is speaking, you can drop them in the chat and I'll raise those. But then at certain points at the end, she'll also just kind of break and open it up for Q&A, in which case you could just unmute yourself and ask the question. So with that, Jerry.
Great, thank you. Hi, good afternoon, everybody. Hope you are well and keeping well. Today I'm going to be talking about planning and financial readiness for small businesses, which is part of financial planning for entrepreneurs. Introduction to financial planning, planning and financial readiness for small businesses. My name is Jerry Aglipai. I am the Senior Manager for the Midwest region and Greater Chicago of our nonprofit organization, Small Business Majority. I also oversee our Women's Entrepreneurship Program throughout our offices nationwide. Just to give you a little bit of background about Small Business Majority, we are a 501c3 nonprofit education and advocacy organization. We are national. We have offices across the country. We've been around since 2005, and we focus on issues of training, education, policy, research, and advocacy, top importance to small business owners. And what do we mean by small business owners? Well, it's really those who are self-employed, micro business owners, as many of you are on this phone, those who have under 100 employees. Some of the top issues we focus on are those that are disproportionately impacting underserved communities and women, which is our special focus as well, such as access to capital, inequitable systemic structures to accessing capital and opportunities. Healthcare that's affordable. We see a direct correlation with health status in underserved communities and the access to capital as well, tied into wealth piece. Retirement security for the future. Women, and it's worse for women of color, retire with 80 times less wealth than men. But entrepreneurship is a path to help remedy that, taxes and such. We do have an online resource hub at venturize.org. It's free resources, checklist on how to become financially ready as well for small business owners that you should use in the top of complementing your work directly with Lauren at Bill Bronzeville SBDC or with Tamora at Greater Englewood CDC, SBDC as well. There are wonderful partners who offer free and no cost assistance, qualified staff that can help provide you along your journey to becoming a sustainable entrepreneur and that of an entrepreneur of color as well. This is just a model, visual model of our work that we do. But I want to talk about today, we're going to talk about why entrepreneurship, the planning of it on starting a business with a business model and business plan. What are the financial foundations for success? And then how do you build your own business to be your own boss? I want to start off with Lucy's. Who remembers the show I Love Lucy? Raise your hand. Lauren, I can't see, so I don't see if people are saying me in the chat box. Rebecca raised her hand. Okay, great. Anybody else remember the show I Love Lucy? Well, you know what? With everything that's happened across the country, especially with minority-owned and most especially Black-owned businesses, I just want to recenter us as something positive, which is Lucy's. We like Lucy's. This is an example of Lucy Foster. Lucy was a slave, and when she won her freedom, her owner actually gave her land. And what she did was she became an entrepreneur and actually set up the town or village bar area, popular, patronized by many in the town that she was in. This is the entrepreneurial spirit of most especially, I like to point out, these are women of color taking the resources that they have to make a better life for themselves, but also provide for their own community. It's also Lucy Crump Jefferson. She was a funeral home owner, civic leader, philanthropist, and educator. First African-American to open a business in Mississippi with her husband by operating a funeral home as well. So I just wanted to, share how much we like Lucy's, hearkening to that theme of I Love Lucy's, but again, centering us about and remembering the history of Black entrepreneurship in this country and creating wealth and supporting their communities by providing services much needed as well. Given what's happened, I just want to let everybody know that we at Small Business Majority have also released a statement, and we continue to stand in solidarity with our Black-owned businesses and owners of color, and standing up to bigotry and inequality for the betterment of small businesses. So let's move on. Businesses owned by women of color. Women and minority firms actually face significant barriers. The reason we're having this session is because a lot of times there are opportunities granted to non-minority owned firms and businesses that they have access to different opportunities and equitable capital and such to support the growth of their businesses. But however, women and owners of color don't have that. Typically, they start off in size, smaller in size, much less capital, much less in savings to start up. Because of that and systemic bias, they also tend to have lower approval rates for bank loans and at smaller amounts, and they become more vulnerable to predatory lending. We're going to go over how to avoid that. And the reason why we and our partners at Bill Bronzeville SBDC and Greater Englewood CDC focus on entrepreneurship, because it is a pathway for freedom for you to create income and build wealth. We know that white households earn more than 100 times the wealth of that of Black households as well. But entrepreneurship is one path to remedy that. The reason why is it's a chance to capitalize on business opportunities to earn income. It doesn't have to be a full-time endeavor. It can be a part-time endeavor to also supplement your other earnings. Oftentimes, it is not uncommon for me to meet a colleague who works for the federal government and has a side business as well. It can also be, of course, a full-time business to provide your main source of income. But what you want to point out here, and Lauren, let me know if my cursor is moving or not. I'm kind of circling because I don't have a pointer. You know, what your business, oh, thank you. Sustainable business revenue is what your business is going to generate, which then creates income for both you personally and your business to invest and save. That creates wealth. And that's wealth. We're not talking about income now. Now we're talking about wealth, building for the future and for generations to come. But what drives small business revenue and income? Well, you need a product or a service that's going to create revenue. You also need customers and human capital, human resources. You need to make sure you have a strategy for efficient operations. What are your marketing techniques to target for your client demographics? If you are targeting to millennials, or actually, let me change that. If you're targeting to over 55, over 65, you know, silver population, and you're using Facebook, is that really a proper marketing channel that you want to use for your product or your service? So you want to look at, what's your marketing to target clients? And above all, what's important is, what are your financial planning tools? Some examples of financial planning tools are actually your business plan, calculations such as a break-even analysis, cash flow projections as well. These are financial planning tools that can help you make a better informed decision. We are all hearing about the pandemic, right? We're all hearing about uncertainty. We can't make decisions unless we have more certainty and data. This right here, your business plan, break-even analysis as a tool, or calculation, cash flow projection, these are examples, but they are key. It's an example of financial planning tools that provide you data to make better informed decisions, but also save you money so that your business survives and sustains itself during times such as a pandemic. So I'm going to go over on starting a business plan, the business model, and business plan. So you're probably wondering, well, Jerry, what's a business model? It sounds so Harvard Business School, right? Quite simply put, your business model is just, how do you plan to make money? What are you going to do to sell this product or service to make money? What is it? What is it that you're selling? What is it that you are providing? What is it that you are creating to help heal, to help solve a problem, to help make things easier for people, to help provide sustenance, if it's a food product, to be, digested or eaten? What is it? How do you plan to make money with your business? And there are worksheets and tools to help shape what your business model is going to be. I just had a discussion on what the business model was with a business owner today who took a cohort training. I said, go back to your business model. What is it? What are you selling? And there are some of these tools for to create what's your business model. You'll sometimes hear about a business model canvas, a lean startup canvas, an idea napkin, and such. I'm going to use, just as an example here, the idea napkin. There are other examples as well, which I can send, and Lauren will send you about different worksheets to shape your business model. But I'm going to pause for a second and go back to a really simple one, as if you were in the idea phase of determining what your business model is, and pull up a sample of the idea napkin for you to see. And this will be sent to you by Lauren as well. So I'm gonna have to, I believe, stop my screen and pull this up. Let me know, Lauren, if they can see. I saw people briefly.
I don't see it yet.
Okay, share screen. Here we go. All right, here we are.
Yep.
I talked about in the previous slide, business model canvas, a lean canvas and such, and I will send those examples as well. They will fall under the business model category that we are talking about right now. But here is a very fundamental, basic one as an option to use. It's a one-page one, so are the other worksheets that I talked about. But I like this because I find oftentimes that community small businesses have so many different ideas about what they want to be their business model. And let me know if I'm going too fast. But you can print out as many of these sheets as you want to help hone what your business model is. What are you doing to make money? And I'm going to pick on a colleague of ours. I won't say her name lovingly. She's fantastic, but she's got, she had this idea of salty slacks. Being older, she's afraid of slipping on the ice, and thought, wouldn't it be great if you had pants that shook salt on the ground as you walk so that you don't have to, slip on the ice. So using that, who are you? Well, she is silver entrepreneur who has, some experience in sewing, provides some business counseling as well. So she is aware of how to frame what her business model is. What is she offering? Slacks. Who is she offering it to? what are you going to offer that to? You know, is it going to be just older adults? What about people who are disabled? This is where you want to think about, you know, who you're offering it to. Why is that person going to care? And what are your distinctive competencies? When we look at this one here that talks about distinctive competencies, we're really talking about what's your special knowledge or skills or assets that you have, intangible assets, or maybe, you know, not just capital assets, but intangible assets that's going to make your business model stand out as you shape it. This is called the idea napkin. So for instance, I had a prospective owner say that he wanted to start a lawn business. When it came to here, what are your distinctive competencies? He had said, well, he used to mow lawns. Great. But then as we were all having this interactive discussion with him in class, it turned out he'd never managed teenagers, and he wanted to hire teenagers and college students to do the lawn mowing. And he'd never really kept up-to-date lawn mowing tools. And so, you know, all these questions came up about how and why. One of the things that I encourage you to ask yourselves is how, the 5 hows. Who's heard of the 5 hows or the 5 whys? Raise your hand. I think I can see them, Lauren, raise their hand. It's essentially saying, I'm going to offer a product on salty slacks, on slacks that will distribute salt when you walk in the ice. Why? Because I don't want people to fall. Why? Because they could hurt themselves. But why would they hurt themselves? You know, why is this product going to help them? Well, it provides thermal pants. Okay, she's building it out now to wear in the wintertime while distributing salt. Okay, maybe, you know, you've honed down the why. Now it's how. How are you going to offer it? You sew. Are you going to sew it yourself? Well, no. How is that going to be done? Well, I guess I'm going to have to research firms that can provide material and sewing it at bulk. You know, how's that going to be done? I mean, the 5 hows and the 5 whys, I hope you're getting a better understanding. It really brings down and hones you to really why you are doing it and how you're going to be offering this product. So I hope that's helpful for you. And Lauren, let me know if there's any questions on that.
No questions yet.
Great. And then there is also, of course, I'm going to pull this up. This is a lean business. This is another worksheet that you can use as, again, you work with the SBDCs in your spare time. As you build it out, there's also a lean canvas model. I'm going to show you an example of this completed as well. This is another one that you could use. I'm going to share my screen. Okay. Let me know if you can see it.
Yep.
Okay. So another 1-page example of building out your business model is a lean canvas. I just showed you the idea napkin. Here's a lean canvas one. This is Susan the trainer. And there's copies of this, blank pages that I can send to you via Laura. Susan the trainer. This is going a little bit more in depth now from the idea napkin. You don't have to use one over the other. You can use them as you are building out your model, your business plan. She sees a problem. She was a trainer and nutritionist. Top 3 problems are here. Post-pregnancy weight issues. She wants to focus specifically, it looks like, pregnant women, not just anybody, but she's trying to really, she asked herself those 5 hows and whys, and it looks as if she's pivoted to trying to focus on women who just had a baby and are toddlers. She's looking at existing alternatives as competitions. What's the solution? What is the unique value proposition that she would be offering as a trainer and nutritionist for women who just recently had a baby? What's the unfair advantage, you know, so that she can't be easily copied or bought? This is, again, putting you in a niche for your business model as an advantage to make money. You know, what are the channels, the path to customers? What are your customer segments as well? what's your revenue streams? What's your pricing basically? How are you pricing this? And then what's your cost structure? What are your working capital costs essentially for the cost structure? Product to market. Little bit more in detail than the idea napkin, but more fleshed out. The nice thing about the one-page worksheets is that it's one page. We know many of you are busy working another job or a second job as well. So understand that there are tools out there that you can use for yourself, and as you're working with the SBDCs, to suss out what your business model idea is and how you're going to make money. So if any questions on that? Okay, I'm going to go again with the share screen. I just went over that. Normally, if this were a longer session, we'd have some time out so you could look at this in advance and do the idea napkin and group review. But I hope hopefully you get the idea that there are different worksheets and tools out there for you to use. We encourage you to write things down. Writing things down really helps to organize your thoughts and helps you better plan. And the reason why you want a better plan is going to lead up to your business plan here. A business plan is going to help you focus, plan, and adapt your actions. It also, quite frankly, it's going to help you save money, because if you're not accounting for different permutations of what may happen along the way as you are starting to launch your business, or if you are already in business deploying your services or your products, you may have costs that you may not have accounted for. So your business plan is incredibly important. It helps you test your business model and idea. It helps you guide your decisions based on your time, your money, and your resources. Some of you have families. How many of you here have families, children or older adults to take care of? Raise your hands if you do. Anybody? I mean, the business plan is going to really help you allocate how much time and money you're going to spend in ramping up your business and operating it as well. It reduces those risks. It also helps you understand your industry landscape demographics. I said earlier, if you are catering a product to a silver population, older adults, or if you're catering it to new moms or millennials as well, it helps you understand who is your competition, what else is out there, and what your demographic inclinations are into supporting the purchasing of your service or goods. It helps you identify who your target markets are. They even appropriate? Are salty slacks even appropriate for older adults? Maybe young children want them because they're running around and they're distributing, and they may slip on the ice. You want to make sure that you're marketing your business to the right customers. But this is important. When you are seeking funding, your business plan also helps you to communicate and justify your business model to others. It's not just there to guide you. It is there to communicate and say to people, this is what my business is. I have it planned out. Ask me a question and I can answer the what ifs and conditions that you may be asking those questions under. So it does help you attain funding as well. So I want to let you know, if you haven't done a business plan, you want to consider doing a business plan. You're probably wondering, well, what kind of business plans are out there? There's generally two types of business plans that fall into the bucket. One is a traditional one. I'm not sure how Lauren and Tamara, the SBDCs, prefer. There are various partners that we work with who prefer traditional, some prefer lean, some prefer both. But to give you an idea, there's two types of business plans in general. There's a traditional one that can be lengthy. These are the ones, if you Google, you'll see, oh my God, why is it 35 pages? They are the more lengthier ones. You can use them. It is though better used by a company who is willing to take their business to a next phase. You may want to use a more scaled back traditional one, however. There's also the option of a lean business plan. These are usually the one-pagers, which for startups, it's recommended when your business model is relatively simple and it hasn't changed yet. For instance, in the idea and startup stages. These are going to contain elements, much like the worksheets for a business model, your business plan. You know, there are one-page worksheets that are out there as well. So I'm going to pull up sample of a business plan model that's one page. And then I'll show you a traditional as well. So here is a lean business plan canvas. This is a one-page example.
It's not showing, Jerry.
Oh yeah, because I haven't shared yet.
Oh, sorry.
I had to open it, sorry. Here we are. Okay, there we are. Okay, so this is a blank copy of a lean canvas template. Don't let it scare you, you know. Again, this would be one page here, your problem, the solution, the cost structures. It's similar to the business model. So you can almost be like, it's a business model / business canvas combined for a worksheet. So when I showed you let me rewind. When I showed you the idea napkin earlier, and then I showed you the example of Susan the trainer, this lean canvas template combines both the purpose of a business model and a business plan in one. That shows the problem, your existing alternatives, the key metrics. And here's just some questions if you're wondering, well, what do they mean by problem? What do I fill out in this section? You know, what do you mean by solution? It's really asking, you know, what is your solution? This is important here, actually. I would like to say key metrics. What you define as a measure of success. Is it your profit? Is it your revenue? So this is what key metrics is when you see the lean canvas model as well. This is just an example of it, but this combines, serves two purposes. It can serve as a model for a template for your business model, as well as a template for a one-page business plan as well. I'm going to stop and I'm going to share another type of one-page business plan model also. This is, I haven't pulled it up yet. It's similar to what you saw. Oh, I can't, for some reason I can't open it. Yeah, here it is. All right, now I'll share it now, Lauren. This is a little different from the Canvas one-page model. This is another type of lean model. One is called the Canvas. This is a generic lean model. You know, what's your identity? What's the problem we're solving? You can type it here, you know, coffee, you know, fix as well. What's your solution? What's your target market, the competition? These are your milestones. Let's look at these as your metrics. You know, how do you measure your success? It's interesting. This one, though, has a human capacity component, HR. Who's your team and your key roles? And who are your partners and resources as well? This is just another option for you to use as well. I'm trying to provide you and make sure that you know that there are tools out there that are simple, one-page plans to help get you started as a foundation to starting up your small business. And then these are just questions on how you fill out these boxes. Okay, I'm going to stop share with that. And these, again, will all be sent to you. But I want to show you now the traditional business plan, which I talked about. This is the other bucket, the first one that I talked about. The traditional business plan is going to be the one that's much longer than the one-page plan. And share screen. Is it showing, Lauren?
Yes.
Okay, great. So this is just a sample of a traditional business plan. This is taken from our partners at SCORE, which provides also assistance as well. Though unlike the SBDCs who are helping to sponsor this, that is a volunteer-based network. So that network of volunteers, you want to make sure that you have somebody who is going to be advising you that is specific to what your specific needs are for that. This is a table of contents, general executive summary. description. You'll have your operational plan, how you manage our organization. You will have a personal financial statement, expenses as well. I'm going to jump to that. Competition. It's a very much a narrative form for a business plan, for a traditional business plan. Your niche, of course, what we talked about earlier with the lean canvas, your strategy. It's chunked out in sections here, but again, it is in a more narrative format. Sales forecast may be a section for you. Operational plan, who is going to be assisting you. The legal environment as well. Have you accounted for that? And let me get to the, yep, your accounts payable, you know, who your vendors are, personal financial statement, what's your skin in the game, how much money have you put of your own owner's equity into the business. This is going to be a spreadsheet that will be dropped in here as well. Often the balance sheet and such, people may want to see the profit and loss statements or income statements, startup expenses and capitalization. So, you know, and projections. So as you can see, this is an incredibly detailed plan here, which even includes accounting for you to conduct a break-even analysis. Helpful, again, if you are pitching your company, especially for equity investments type of financing. So just know, like, this is more of the traditional business plan. Do everything that you see here in the table of contents be included? No, you can do a scaled back one, but just understand that at some point in your business, you are going to move from that lean canvas to a traditional business plan, maybe not as comprehensive as this, but I wanted to introduce you to this so that you are aware about what a traditional business plan looks like. And there are different templates that are out there. Again, the SBDCs can assist you with that. I'm going to stop here and, you know, have Lauren and Tamora chime in on their thoughts on business plans, business model, and such from their perspective and the use of them. I'll unmute Tamora.
This is Lauren. I'll go first.
Yep.
For me, I would just kind of echo the need. So as Jerry said, there's the long version and the short, and people have preferences. Mine would be both, right? Because I think it depends on the audience. I would say in the early stages, just doing the short version. It can also be described as your pitch. It would be more useful. It's less overwhelming to have to tackle than doing the full plan. It's a way for you to organize your thoughts as well as to be able to present the idea succinctly to others in the hopes that they'll want to continue the conversation towards funding. Once you are growing and you are to the point of going to say a traditional lender, that's when I would say, I would think it's more necessary to have the long version of the plan, because most traditional lenders go, with what you would see in that more detailed plan that has, your longer financial statement analysis, forecast, and a little bit more thorough market analysis.
Great. Thank you for that insight, Lauren. And so what you're hearing from Lauren is both, and it really depends on your phase in your business, and especially your readiness to find financing and working capital. Tamora, do you have anything to add regarding business plans and business models from your perspective? Okay, we may have lost her for a second. So if she hops back on or says in chat, Lauren, let us know as well.
Will do.
Thank you. So let me move on now to starting business, more of the financial foundations for success. Let me know if you can see the screen.
Yep.
Okay, excellent. So financial foundations, we talked about the business model and the business plan. Now you're going to look at financial organization of your business. These are some of the financial foundations for success. One of the things you want to do is you want to establish business bank accounts. Use budgets, which I'll get to in a second. You also want to maintain organized record keeping and files, and that includes both non-financial records as well as financial records and statements. One of the things, we are in the middle of a pandemic, that we are learning is that many small business owners were shut out of some of the funding because proper business record keeping, including separate business bank accounts, were never set up. And what happens is that it really did not help them access funding the way that a business who had set up these accounts were. Now you have to think, this is money that's being given, whether it's in grants or in loans or even in kind donations, but people want to know that you are doing your due diligence of managing those finances well, especially if it's lending from a bank. You know, they want to be able to know it's a rule called Know Your Customer, KYC. Okay, KYC is Know Your Customer. If you do not have a relationship with a bank already and have an established business bank account, finding funding when you need it, when you did not set it up, when you didn't need it, I hope that made sense, makes it more difficult to access capital, as we've seen so many times over and again, and it's very stark, especially now with the pandemic. I get a lot of questions on trainings from business owners lately saying that they were turned down for loans because they didn't have a separate business bank account and were running their business finances through their personal ones. Very, very difficult for a funder to track that you're actually handling those funds well, and that you're not actually pulling it out to, pay for your Netflix subscription as well. I know that's an egregious and example, but it does happen. And people don't intentionally do that, but you make the mistake of thinking, it's my business, I can do what I want with my money. However, it's not proper record keeping to set you up in making sure that your assets of your business begets more assets for that business, and track that. If you're diverting those funds for personal use rather than reinvesting it in your business and for paying down the debts that your business has to service. And all of that is seen in your financial records and statements. And I want to repeat, record keeping includes also non-financial records too. So I guess I said separate your business checking from your personal accounts. You also want to track your business income and expenses separately from your personal accounts. This goes back to the record keeping. It's important that you set up and plan for your business expenses, for your startup expenses, and your ongoing operating expenses to include the cost of maintaining an electronic financial record keeping system, whether it be QuickBooks or other systems as well that will help you track your finances. You do want to make sure that you have that set aside in your startup costs as well as your operating costs for maintaining a financial record keeping system. And so it isn't just creating a separate checking accounts and savings for your business. It's also planning for financial record keeping tools, electronic. I don't know anybody who does it by hand now, but but really invest in robust systems as well. In talking with many of our partners, sometimes you don't want to skimp on that. Oftentimes we'll hear small business owners bought something off the shelf because it was cheap. What happens then, especially if you have employees, it may not provide the tools that you need to properly account for payroll taxes. And what happens is if you buy a financial record keeping system that is not robust, you're going to actually wind up paying more in the end, and you'll lose money. So make sure you do your homework. Again, work with Lauren or Tamora to identify what is the best financial record keeping system for your business and invest in that. It will save you a lot of heartache and efficiency. It also will put you one step ahead to accessing funding when you need it. Also accessing that funding so that the door isn't shut for you, like we've unfortunately seen many business owners, especially sole proprietors who did not have separate business accounts, let alone proper record keeping as well. And Lauren, I don't know if you want to chime in on that. I know we've talked about this before, but I mean, given that what we've seen with business owners at this time Is there anything you want to share about that?
This is Rebecca, the advisor at the Illinois SBDC at Bill Bronzeville. Lauren is working on some technical challenges right now.
Okay. Hi,
So,
Rebecca.
hi. If you could, you can move forward, and then hopefully she's able to rejoin us shortly.
Oh, okay, great. So, and if I don't see my screen, so you'll have to let me know if Tamora wants to speak as well.
Yes, she does. Tamora says she can speak right now, if that's okay.
Okay, excellent. Yeah, let me stop the share because, or maybe she's on. Oh, actually, I can't. I have to unmute her. Hey, Tamora, I'm trying to unmute you. I think you need to unmute yourself. Tamora, do you want to type in the box what you wanted to say? Can talk right now. Okay. Can you unmute yourself? I've requested that you unmute yourself. It's the microphone next to your background. Oh, Rebecca, it may be actually, I don't have that function. That might be Lauren's as the main host. Okay, so tomorrow when Rebecca comes back on, ask her to unmute you.
Sorry. So thank you, Jerry. I was getting some clarity from Lauren because she can't log. We don't want to remove the connection that everyone has right now. If Tamora can just unmute herself or type what she might want to share in the chat, that would be most helpful at this point.
Okay, great.
Thanks for your patience.
Thank you. And I'm going to, so we'll give you a few seconds to unmute yourself, Tamora. Or look in the chat box for what you have to.
Yes, if Tamora, if you want to share in the chat box, or you can unmute yourself, hopefully, if you look for your name in the participant panel or at the bottom of the screen, and then share with everyone.
Yeah, I can't unmute you even though I'm co-host. It appears that I don't have that function to unmute people. No, I can. That's weird. I just can't do it for. Yeah, I simply, yeah. For some reason, it's not letting me do it for tomorrow.
Oh, wow.
So, okay, I can move on. Rebecca, when she types it in, could you just flag me?
Absolutely.
Thank you so much.
You're welcome.
And when Lauren comes back on, let me know if she wants to chime in as well.
Okay.
So I wanted to let you all know that it isn't just about separate business checking and personal accounts. You gotta have the record keeping that comes with it as well. And I'm gonna go over that in a few minutes, what that looks like. You also wanna track it for your taxes. Track your business expenses separately. There are apps on your phone. I don't know if you can see me or just the screen, but I'm holding up my phone. There are apps where you can track your business expenses, take a picture, and it'll keep track of it. You know, not just your hard copy receipts. There are so many hacks and apps out there that can help you as a business owner to keep track of these records. Just make sure that you find one that works well for your needs and your working ways. Tracking your business revenues, that's what helps you also with the record keeping and the financial record keeping. You also want to separate your finances for liability and security. Operating as a sole proprietor is fine, but if you are going to decide to incorporate and become an LLC, an S Corp, or a corporation, it does require separated financials. I'm not sure why it says require separated financials. You should just do it, period. You do need to have an EIN number when you do incorporate instead of your social security number, or an ITIN number in some cases. You also want to make sure that you create budgets. I talked about business bank accounts. record keeping, financial, non-financial. The third component is creating a budget. Now, for those of you in the startup phases, you're going to create a startup budget. You're going to create what you believe your costs are going to be to start up, and then what your actual costs really are. And after you transition from a startup budget, it becomes and evolves into your operating budget. Budgets are going to help you plan and prioritize expenses. You also get to review your revenue and the actual income that you get. When I mean income, what's the actual money that you have in your pocket at the end of the day after you pay all of your business expenses and debts that you need to service? So as I said, there's your startup budget, one-time expenses, maybe that printer, and your operating budget, ongoing and fixed and variable costs. I said an example earlier, record keeping. You are going to be paying a fee for maintenance for electronic record keeping with QuickBooks and such. Make sure that's in your operating budget for you as a small business owner, and that you have revenue to cover those costs as well, which ideally is what you want your business to create for you. Financial record keeping is an activity that's going to establish your business, save money, and also find funding. Again, organize records such as Excel, QuickBooks, and such. Financial statements. Here are 4 key financial statements that record keeping is going to result for you. And at some stage after this, we recommend that you take training on how to read and interpret these financial statements of a budget, cash flow statement, income statement. In the nonprofit world, it's also called the P&L statement, balance sheet. One thing that's missing here is these are, what you're planning for, but then there's something called in the business world pro forma statements. Don't let it scare you. Pro forma simply means projected. There's your cash flow statement that shows what cash is coming in and what cash is coming out of your business. Then you will also learn about projected cash flow statements. What do you think in the next year is coming in and going out? Again, we are in the time of pandemic. Any projections that you may do, if we weren't in a pandemic, generally speaking, it's about 6 months to a year. It's really recommended if you are in business now to modify your projected cash flow to monthly or even weekly, because things are very uncertain as we speak. Make sure that you're seeing what's happening in the industry and pay attention to how that's going to impact your operations and the ability to create revenue. Because that normally we tell you create a cash flow statement and a projected one that we got for a year. It's really advisable that you are more flexible in creating projected cash flow statements to monthly and maybe even weekly, depending on your industry now and how things are going with reopening. And also, to be quite honest with you, possible scaling back to, I know we are in phase 3, we may scale back to a phase 2 if there's another spike. So understand that we are in fluid phases. It is not going to be a linear phase. We are on the timeline of an unknown virus with uncertain data, becoming more certain, by the week as we get more testing and information and data. But because of that, we do want to recommend that if you are in business now, projected cash flow statement. And this is at any time when there is severe economic upheaval. You make sure that you are flexible with reviewing your financial statements. Balance sheet, it gives you the current financial shape of your business, the health of your business. Income statement, of course, the income coming in. Financial record keeping, when you do obtain the electronic record keeping for financial such as QuickBooks, you're going to see that you can track your receivables. On your financial statement, your receivables, the money that's due to you, that people owe you, they're known as assets on your financial statements. They're capital goods received from loans or equity, goods, merchandise, and services. So financial record keeping is going to help you track the receivables. Who owes you money, right? Who owes you money? It's also going to track your payables. the debts that you may service. On financial statements that I noted earlier, these are known as liabilities on your financial statements. Payables are who do you owe money to, basically. What are your payments that your business owes others? Your rent to your suppliers, to if you have a transportation business, is there a mechanic that you pay regularly to upkeep the vehicles? You know, mortgage, taxes. There's also, if you have employees who are on payroll, you know, any benefits and wages that you owe them. Those are payables on your financial statements are known as liabilities. Liabilities are what you owe other people. Assets are what you owe and what's due to you, to quite simply put. You'll go deeper as you work with the SBDCs on how to interpret these on the different financial statements, but really wanted to break it down to you on what are receivables and what are payables and what are they actually listed as on these financial statements. There's non-financial record keeping. Do please, especially when there is severe economic upheaval, keep track of non-financial records. Your tax records, your legal documents, bank documents, any licenses you may have, incorporation documents, partnership documents, property documents, whether you have a mortgage or a lease, your documents if you own a website domain as well. I have to tell you, you know, one of the things I've heard of stories from business owners who were in partnership with a friend or a spouse, you know, and when that relationship broke up, they couldn't find their partnership agreements or assumed that they didn't need one. So it's incredibly important, even if you have, you know, you're in business with your best friend, your mother, your father, your spouse, to make sure there's also a partnership agreement and a contract that lays out what the specific roles are. And it isn't just in case, it's also people want to know who invests in you, and when you're finding funding, what are the roles are in your organization of the people who own the business as well, who are the partners. So it is not just for liability purposes, there's also a funding aspect to that. People want to know, you know, well, what's your role, Lauren, as opposed to Tamora's role? And what is Rebecca doing? If she's also a partner, she's a third partner. Those partnership agreements lay it out for any potential investor or funder for your business. Now, I want to go over how to open a business account as a single owner startup. But before I do, Rebecca, is Lauren back on, or is Lauren or Tamora?
I'm here.
Oh, great. Lauren, do you want to say anything? And if Tamora typed anything in the box?
Tamora did not. The group, she's here. Only thing I want to add just to the note on financial forecasting. Again, as you guys work with either SBDC, be it Bill Bronzeville or Greater Englewood, you know, there are tools that we have make available to you to assist with that. One of the things I just want to kind of shout out is a program called Live Plan. It's a program that we both have invested in for our clients that makes very, very much easier use of doing your financial forecasting and breaking it down in such a way that you don't have to have a wealth of financial planning background or savvy to be able to build out what looks like on the end a very savvy financial forecast. And as Jerry mentioned, you know, your plan should always be flexible and nimble, but even more so in times like this, they have to be something that you can kind of play around with and update based on new information, current needs, current trends. And as the name of the software itself implies, it is built to be a live plan. Your plan should be a living, breathing document. It's not a static document that you make once, put in a file folder, and never think about it again. And so one of the very cool things about it is that you can build up to 10 different forecast scenarios, financial forecast scenarios, with one like baseline assumption and then a bunch of if-then. So there are definitely tools that are out there that are available that can assist you with this financial forecast.
Great. And Lauren, I'm sorry, you broke up a little bit. Can you repeat that again and type that in the box for people what that tool was?
Sure. It's called Live Plan. And as you guys, like I said, if you are currently a client or if you have not signed up to be a client, I can also put a link in the chat as to where you can do that. But it's a software that is available to the client base.
Great. Thank you.
Mhm.
And they'll type that in the box as well. And all this will be sent to you afterwards. So
Sorry, Jerry, I was on another call. But the tool that we use is Growth Wheel.
great.
So Growth Wheel, we do presentations, actual trainings, taking people through Growth Wheel. Growth Wheel gives you a 360 view of every aspect of your business, and they call them decision sheets. So they're worksheets that ask you questions. You fill out the questions and kind of build from there. So there's a whole financial section in Growth Wheel. We're certified advisors for Growth Wheel. So it's a tool for the advisor to give you homework, to work out your financial plan, and then come back to the advisor to set goals and targets and things like that with your advisor to get your financials in order. So we use Growth Wheel on a presentation as well as a one-on-one, as a one-on-one component.
Great. Thank you so much. So I want to talk about, I talked about opening a business account, but something that I noticed is that a lot of business owners, we tell them to open a separate business account and we say you should keep it separate, but we don't tell you how. You see it on a list of checklists, that you've opened a business account, but actually it's not as simple as that. And if there's anything, the reason why I created this is again, it's the pandemic. People, I discovered, did not even know how to properly open a business bank account. So I'm going to use this example here of how to open a business bank account. And this is as a single owner startup. And I say single owner because most of the businesses that we deal with are not partnerships. They're either single owner, sole proprietors, or they are single owner LLC. So in this example, Roxanne Rockstar just passed her state exam and got her plumbing license. She has decided that when she completes her apprenticeship, she does not want to stay on with the plumbing company. She wants to own her own business. Before she obtains insurance, because you do need insurance for her, she is going to be working on people's homes. And before she markets herself and does any business for hire, any exchange for money, Roxanne Rockstar, the plumber, she'd open a business bank account and set up record-keeping systems. This means already in her startup cost, she has purchased, and is ready to tee up an electronic record-keeping system. This is just for West Side Forward, but in this case with another SBDC, which would be Braille Brownsville or Greater Englewood SBDC, you decide on your business structure for operational purposes. If there is a single owner startup, you have three options: single owner, sole proprietorship, or an S Corp, as I noted. And this is a pathway of how you actually start your business account. It's not as simple as saying, Lauren Amos wants to go and start up a business account with her name without even putting down on paper that she's a business. You need to put down on paper that you are a business before you create a business account. Again, I'm going to repeat this. Put down on paper that you are a business before you open a business account. What that means is you use your name to do business, or you create a name. You go online with the Secretary of State to see no one else has that business name, whether you're doing it in Lauren Amos' name or, Lauren Amos Bakery, Make Goods. You can decide this, again, work with Bill Bronzeville or Greater Englewood, if whether or not your business should be set up as a single owner sole proprietorship or a single member LLC. If it's a sole proprietorship, you go to the county, not the Secretary of State, but the county, to apply for a doing business as certificate. If it's to be incorporated as a single member LLC or S Corp, We're not making that decision for you. Every business owner varies. You go to the Secretary of State to get that certificate. Once you get these papers, you go to the irs.gov, and it takes less than 5 minutes to get your EIN number, your employer identification number, sometimes known as your tax ID. Once you get that tax ID or the EIN number with your papers as either a sole proprietor or incorporated LLC or S Corp, then you take the two, you go to the bank with your EIN number, your Social Security or ITIN number, your DBA certificate, LLC or seal of incorporation, and you open your business bank account. It is not something as simple as going in before you have this paperwork in place to say you want to open your business bank account. You must show and demonstrate you are actually a business on paper in order to open a business bank account. Any questions there? And this one you can read when you get the slides. This is an example of how to use a business bank account with the financial record keeping that Lauren, Tamora, and I were talking about. Let's say Roxanne, the plumber, saved $2,000 from her apprenticeship, and it's in her personal bank account, right? In order to set up her business, she actually wants to purchase supplies. She already set up her business bank account in this step. She did all these steps, 1 through 5. Her business account is set up. So how does she use record keeping? This is an example. She'll take the $2,000 from her personal bank account, transfer it to her now existing business bank account from her personal account. She uses the financial record keeping system that she invested in to show that she has owner invested capital of $2,000. Now it's not only in the business bank account, but it's also in her financial records that there is owner equity of $2,000. She can use now from the business bank account here. Now she can purchase the equipment, not directly from her personal bank account, but from her business bank account. So she'll use to purchase the plumbing equipment from the business bank account. And she's also used her financial record keeping to track how much of the $2,000 in working capital was actually spent and how much may be left over for other business needs. This is an example, just one example, of how to use your business bank account in line with your financial record keeping. Any questions there?
Two things, Jerry. I'm not sure what's happening, but the presentation itself is going in and out of being blurry, so just something to be mindful of. Like now it's clear, but it's been kind of going in and out, being blurry.
Is anybody else having that problem? Just please type in the box. Okay.
Yeah, a few. I saw a few in the chat.
Okay.
That was saying it.
Stop the share.
And then bring it back. But
Yeah.
while you do that, I just wanted to also make a note on that point of needing to be set up as a business on paper, so having your legal entity in place. For anyone that is not registered, the webinar that is next Wednesday at 2 o'clock, just like today, it will be with, there used to be the Law Project. They keep me honest on the name Chicago Committee of Lawyers, Civil Rights Lawyers, CLCCR. They'll be presenting next week on legal nuts and bolts to start your business, and included in that is setting up and selecting the correct and setting up your legal entity. So that's something that ties directly into what Jerry was just talking about. I just dropped a link in the chat for register that if you have not already done so. And then Jerry's screen looks good now, just FYI. And then the other thing is something, as we talk about financial record keeping, something that has come up a lot as we've gone through the whole COVID experience, and people were applying for the various funding opportunities. There was lots of focus on protecting payroll. There was obviously the payroll protection loan program itself, but other even grant opportunities were centered around being able to pay employees. As a sole proprietor, you are still an employee. You're your own employee. Something that, as we talk about financial records, that sole proprietors need to keep in mind, you have to actually pay yourself, right? That's something that I think coming out of this is a big takeaway people should have, of actually paying yourself a wage from that business bank account versus using, saying, this is my business bank account, this is where I put my sales, this is where I subtract, or where I spend the money I need to generate, my sales or my income, and whatever is left, well, that's just my money and I spend it, right? It goes back to that financial record keeping and documentation that Jerry is talking about, and being able to clearly outline, paying yourself a wage. That's one of the things you need to keep track of.
Great, thank you. And finally, I just want to.
I had something,
yeah.
Jerry. Yes,
Yeah.
hi. This is Frida.
Hi, Frida. How are you?
Hi, Jerry. Oh, good. How are you? And everybody? Great. When the revenues come in, Jerry, that scenario that you talked about regarding the regular account, your personal account, and then you could transfer some funds over to your business bank account to start startup capital to buy expenses or to buy equipment. I wanted to indicate, like, if when revenues come in from that business that you've gone out and did some service and generate business, when the revenue come in, you want to make sure that the revenue goes into that business account and that it doesn't go into the regular personal account and then you transfer the money over again. So I just wanted to, can you expound on that, please?
Well, I think what Lauren was saying as well, and Lauren chime in, is that when revenues you earn are going to go in your business bank account. You're going to have on your budgets and your financial statements how much you're going to pay yourself from the revenue you earn from your business. So that one you need to decide how much you'll pay yourself from the revenues. What's your personal income from it? That then you can transfer to your personal bank account, because you'll have a record that that's how much you're paying yourself from the revenues, should you make enough of what your goal is. So I hope that's clear. I know, Lauren, if you want to provide a different way of looking at that.
Okay, no, thank you for that. That was great. Thank you. Now,
Okay,
I understand
great.
what Lauren, it was regarding the scenario that you had entered, that you expound on. That you
yeah.
Yeah, that's what because I kind of slipped on that. I had it was an actual sole proprietor account. And then I went on and incorporated and created a business account. I was able to transfer money back over, but I didn't stop all of my revenues from my business. They were coming into the sole proprietor. Well, really, it looked like it was a personal, but instead of coming into the business. So I just wanted to reiterate that the revenues that would come in once you start your business account, it should go directly to the business account. That's correct?
Yes,
Okay.
that's correct. Yeah.
Thanks,
Thanks, Frida. Good to hear from you again and see you.
Same here. Thank you.
Hope all's well. So I wanted to, we're running short on time, so I wanted to just say, you have only 24 hours of a day. Many of us, have families, maybe children, teenagers, older adults to take care of. You need 8 hours of sleep. These are challenging times. We need to make sure that we nourish ourselves. There's also work, if you're fortunate to still be working. But then there's transit. Well, if we weren't in pandemic stage. But you also understand, you also have hours that you're spending for your own personal grooming, physical fitness needs. There's also hours that you're going to be spending for your home, your daily living needs, cooking, paying bills, tending to your yard work, your family needs, children, parents, partner, spouse, friends. I hope some of you, I hope you have friends, but we need that. We need our community. We need one another in these times as well. And then there's also your leisure and mental wellness activities. So be aware that I always say, this is like barbecue, building your business up, repivoting it, starting it up. as you know, you go low and slow like barbecue, you're going to have a great product. And you have partners here with the SBDCs who will help you. If you go fast when you make barbecue, it's not a very good tasting product as well. So low and slow. And also, mind you, you know, many of you do not quit your job to start your business. You need that income coming in as well. That's why I said earlier, a lot of individuals, it's to supplement their income while they keep their day job also. So just be mindful, there's 24 hours in a day, and to maybe use your phone. You can't see me, but I'm holding up my phone. It's a wonderful tool to try to manage your time as to how much time you'll be spending on your business plan before you make that appointment and work with Rebecca and Lauren, and how much time you'll be working on your budgets before you know, go in for your appointment with Tamara. I mean, just make sure that you're budgeting your time well and taking care of yourselves. And I was going to take this out, but I decided to leave it in from the last training. These are challenging times. You know, one of the things to do that I like is a box breathing technique, to just breathe for that calmness as to, you know, what's happening with the pandemic and the last couple of weeks. I'm hopeful personally that this is going to be agents of change for the future. But in the meantime, when, you know, I had that slide about 24 hours of the day taking care of yourself, just remember to breathe. And this is just a technique that'll help regulate your breathing and give you that space mentally to, you know, tackle the world and be your own, build your own business as well for entrepreneurship. And with that, there's questions if you have here, but we're going to be pausing now for a part 2. Lauren, I believe.
Yes, we're gonna pause. So I set the part 2 to start at 3:20, so we'll only give it about, you know, 5 or 6 minutes for folks to join. There weren't any questions in the chat, but if there were any additional questions of the things that Jerry has gone over so far, go ahead, feel free, take yourself off mute and ask those questions. Hopefully everyone will stick on with us. The next part, we're going to talk about funding sources, potential funding sources, and also talk about ways to avoid predatory lending. Okay, so we'll take about a 5 to 7-ish minute break, about 5-minute break to allow for folks who were only going to join for the second part to join us. If by 3, I would say 23, there are no new folks that have joined, we're just going to keep going.
Mm-hmm. Great.
But if you have questions, feel free to unmute and ask us. Yeah. You are ready, we can jump into part 2. Oh, I think you're muted.
Thank you.
No problem.
All right, let me know if I'm muted at any time as well, or it's blurry as well. I cannot see the Zoom chat when I present, so you're my wingman, Lauren.
I'm here for it. I am here for you.
Thank you. All right, so I'm going to share the screen now. We're going to jump into part 2, Introduction to Financial Planning, which is planning and financial readiness for business. We're going to talk about navigating funding right now. So I already went through that. Again, for those of you who are new to the call, Lauren, did anybody new come on?
I was about to say, nope, we kept all the same.
Oh, then I'm going to skip through this.
Yep.
As well, and focus on, where am I? How to fund your business. How are you going to fund your business as part of, now we just went over business model, your idea, shaping it out, you know, a business plan, some worksheets that you can use when you're working with the counselors at the SBDC. We went over some financial tools such as budgets and financial record keeping, which are going to generate those financials for you. Went over on setting up a business bank account, how to actually do that and how you become a business on paper as well. I wanted to emphasize that because, again, it is incredibly important to know that when you need the funding, which we're about to talk about now, if you do not have that in order, it puts you 5 steps behind accessing the money that you need to help your business out if there is severe economic upheaval. So how to fund your business to obtain capital and avoid predatory lending. Before I begin, how many of you, when is the best time to find funding? Type in the box and Lauren, shout out, you know, what some of those answers are. When do you think the best time is to find funding for your business?
Don't be shy.
Yeah, don't be shy.
So there are no wrong answers. Best time we think is before you start. I have one that says when you don't need it. When you and I believe, and free to correct me if I'm wrong, with the statement, you mean that you look for funding before you need it. I think that's what you mean. I have another answer that says at the beginning of the year. Another that says all the time. Free to confirm that yes, my interpretation was correct. That she was saying before you need it. So we have a range of answers.
All right. Who said when you don't need it or before you need it?
Frida.
Frida did? Okay, Frida, gold star. You know, it is before you need it. And the reason being is that you want to start developing a relationship, not just have business bank accounts, but start to develop and sow the seeds of a relationship with somebody who's going to fund your business. You want them to understand what your business is, your business model, because they're the ones who are going to go to bat for you when you are seeking the funding that you need. So it is when you don't need it and before you need it. This is some examples of just some sources of funding, you know, family and friends, your work income, personal savings. It's also, you know, microloans, CDFI, grants, and such. You can fund your business from an incredible, you know, an array of funding sources. But one important thing is that you want to ask yourself questions. Some important questions to consider is, what do you need the money for? How much money do you need? How long is it going to take to pay it back? This one right here, that I'm highlighting, what is the current shape of your financial business? This goes back to what we talked about in part 1, understanding your business financials as generated by that financial record keeping. Those business financials that are generated from the financial record keeping is going to help you understand the current financial shape of your business. Eventually, you are going to learn, or if you haven't already, if you are in operations, how you're going to interpret those financial statements so you can determine what the current financial shape of your business. Or if a funder asks you, well, what's your working capital position? You're going to know what to do, and you're going to know how to answer it. How long have you been in business? If you're looking for a loan, how much collateral do you need, if any? How quickly do you need the money? And are you seeking debt or equity financing? The difference is, sorry, my mouse is bouncing around. Debt or equity financing. I'm going to be focusing more on debt-based financing because that is the majority of financing for most small business owners in this country. But if you're wondering what equity financing is, that's the financing that you see of investors who want to provide funding in exchange for ownership in your company. So who here has watched Shark Tank? Raise your hands. I can't see it, but I'm assuming some of you do. Rebecca, great. I have a love-hate relationship with Shark Tank. I start to watch it and then I can't watch it anymore because that's essentially equity financing. They are dickering with the sharks for how much money they want to have in exchange for ownership. And it's surprising how much owners will go on there to give away 30% of their business, which is a sizable chunk, for something as low as $50,000 or something like that. And unfortunately, I see the low amounts in exchange for ownership happen most frequently on that show with women. It's my own personal observation. But in this case, the reason again why we're focusing on debt-based financing is that that is what the majority financing is in this country. Equity financing, yes, there are angel investors, but in general, outside of angel investors, equity investors and venture capitalists are looking for a minimum of $1 million on average, on the low end, actually on average, to invest in your business. So you just want to make sure you know what that difference is. I know Shark Tank seems so cool, you know, with all these people looking for that angel investor and equity investor for their company. I was just trying to bring a little dose of reality. If you're a childcare business and you're looking for an equity investor, there's no incentive for them to provide funding from you where there's 20 more other childcare businesses in your neighborhood. So that's just a more simplistic form of equity financing and what they are interested in. The reason why I'm going over this is predatory lending has grown in this country since 2008, the last crash that we had. This is the millions of dollars that it's decreased by in amounts of loans for lending for small businesses. Banks really saw small businesses as being riskier. And there's a steady decline since 2008 with small businesses. What happened is alternative lenders have stepped in online to fill the void of high cost of loans, but they're doing it with high cost short-term loan funding options, like some of those vendor payment loans. If you have an account with Square or PayPal, that's great. Those loans, I know I've spoken to many business owners, they've been helpful, but they've also cautioned if you don't have that cash flow coming in, it can be tough to meet that short-term payment as well. The challenge with predatory lending, it is not regulated at this time by the federal government. It is not regulated by the state of Illinois. There's no state that regulates it except most recently California. Online lending is not regulated by the federal government. So I want to let you know that. Even if it's on the New York Stock Exchange, to be quite honest, some of those companies are based in the island somewhere. It is not regulated. There's no transparency and enforcement of terms to be transparent. And what this means is, of course, women and minority firms, as I said earlier, are facing significant barriers and they're more prone to predatory lending because they're feeling pressed. Their backs are against the walls and they're saying, oh, it's so easy to apply for a loan online and I don't have to submit my tax reports. I don't have to provide financials, you know, or maybe there's no credit score needed and I get my money within 24 hours. Just be aware that some of those loans can go as high as interest rates of, can type in the box, Lauren, let me know. Do you think those loans can go as high as 40% or 80% or 400%? What are they saying, Lauren?
No answers yet. Guys, in the chat, I have 40%. What else?
80% or 400?
So I have one answer of 40, another of 400. Anyone else want to guess out there?
Okay, who said 40?
Alicia.
Lisa, you're wrong, sorry, but good try. Who said 400?
Claudette.
Pardon me?
Claudette.
Claudette, you're right. They can go as high as 400% and it's not uncommon. Now, what's your credit card rate? What, 14 to 21, 22%? That's exponentially higher than what your credit card rate is. So just be aware that, you know, this is the reason why we're talking over how you navigate funding is because of predatory lenders. Now, outside of the big banks, we know the big banks that are out there. I want to go over 3 alternatives for you. And I believe Lauren alluded to it in the chat earlier. But one of the alternatives for you outside of the big banks are CDFIs. CDFIs, their technical term is Community Development Financial Institutions, but these are essentially nonprofit lenders. These are nonprofit lenders who are set up to provide financing for underserved communities and those who are typically ineligible for traditional bank loans. They were there to level the playing field after redlining was discovered and tried to remedy redlining for the home mortgages for Blacks and other communities of colors. We also, the system, they looked at, we have a problem in banking as well. It didn't just happen with selling homes to people of color. We have a problem with banking. So CDFIs were created to offer financing for those who were typically ineligible for bank loans. And it isn't because people of color don't earn income, they do. It's a symptom of not having the resources to manage the funding and the financing. And what happened was that people take advantage, as they did in the last crash, of Black and brown communities. And it worked so well, it spread like wildfire of bad financing, home financing, that in the end, it was majority whites. The reason why these CDFIs were set up is to help those in underserved neighborhoods to level the playing field for access to capital. Low-income communities, but those communities that have been economically disinvested in as well. Don't get me wrong, they will also help other business owners who can start up who may not be located in an underserved area, because CDFIs have become known as the financiers who open the door for small businesses, even if your credit score is not ideal. And the reason being is CDFIs are like, I call them the George Bailey banks from It's a Wonderful Life. Look at these CDFI nonprofit lenders as George Bailey banks. They don't care if your credit score took a ding because they understand, well, we know that your spouse may have had cancer and you had bills to pay and before Obamacare set in and you're still paying that down. They understand that it took 5 years to find a job again after the last recession. So CDFIs are understanding of that and hold the door open. Many of them may not have minimum credit score requirements as banks do. So we want you to understand this is one option, in addition to the large banks, are the CDFI nonprofit lenders. About 50 to 60%, and well, actually it's more than 50%, I know that, so I actually want to say 60, of clients who walk through CDFI doors, they need more in-depth assistance. And maybe it takes 3 months or maybe it takes 6 months to get the financing they need. They have community lenders to support you and to get you prepared. They also offer microloan programs. So again, there may not be a minimum credit score. If you want to find a CDFI near you, here's a locator by our partners. This is the Association of CDFIs for Small Business Loans. Other CDFIs in the Chicagoland area is Accion, who are our partners, CNI Microfinance as well, CRF also. WBDC is not a CDFI, but they do provide nonprofit lending as well. So there are options for CDFIs for you to seek funding to start your business or to provide bridge loan, or if you are pivoting your business at this time to the pandemic, or you need additional funding due to some damage that's been done as a result of the last 2 weeks, you want to look at CDFIs in addition to the large banks as an option. So that's bucket number 2. Bucket number 1 are the large banks. Bucket number 2 are the CDFI lenders. Here's bucket number 3 and 4 as you navigate lending. Community banks and credit unions. Community banks are small, locally owned and operated. They were actually set up to support small businesses. Credit unions, also, you must become a member. Not all provide small business loans, but the rates are ideal if you have prime credit. Now, I want to go back to the CDFIs. If your credit score has taken a ding, their goal is to make you stronger financially. You are not meant to continue banking with them for the rest of your business lifespan. They want to open the door for you so that you can improve and get stronger financially and move on to bucket 3 and 4, either community bank or a credit union, maybe bucket 1 for a large bank, national bank, but they're there to make you stronger. Oftentimes, behind the scenes, our partners at the CDFIs are working with our other partners at community banks and credit unions to transition and refinance people into even more attractive financing as they establish a track record of paying back. And the reason being is that many owners, especially startups, start off with the CDFIs because banks in general, they want to invest in productions. They're not looking for possibility yet. But the CDFIs are like, oh, you're a possibility. Let's put some money behind you so that you can grow into a production, something that produces. When you're at that point, you may want to look at, or if your credit score is already prime 630 or above, you may want to look at community banks and credit unions. Again, this is bucket number 3 and 4 of institutions to find funding. And as you can see here, big banks, community banks and credit unions. Community banks, and credit unions have more than 2 times the approval rate for small business financing. That includes loans and lines of credit, a line of credit that you pull on when you need it for your business, than the larger banks. So those are other alternatives to build a relationship with a bank, with not only a bank account, but to also build one to find financing when you need it. Now, a new breed of lenders, of course, in addition to the in-person, is the online lenders, as I said before. Now, I know I said they are not regulated at this time, and to be careful. I do also want to note that they are not all bad, but it's the Wild West. There are some good players, there are some bad players. There are some really bad players out there as well. In fact, our colleagues at these CDFIs and community banks have had to try to refinance small business owners who got themselves into a unscrupulous predatory lending product. The one thing with online lenders is if, Lauren, I'm gonna pick on you, if Lauren the baker wanted to get funding from an online lender, you have to understand that unlike the CDFIs, the community banks, and the credit unions, and even the large banks, those 4 buckets of financing, alternative online lenders, fintech lenders, they may actually be using social technology and social data to assess your risk. So what that means is if Lauren the baker applies for a loan online, they're going to be looking at her Yelp reviews. They're going to be looking at her, that type of data to assess risk as well. And what happens if you have rogue people or competition making negative remarks about your business? I feel bad for some of those businesses who've been accused of unscrupulous practices, and some of them have been, but that's now a mark against them by their former customers in accessing data. Again, it's largely unregulated, so just proceed with caution. If you're unsure, work with the SBDCs. These are just 4 different types of online lenders. There are marketplace lenders. It's basically like a Match.com. Type in your information and they'll match you with different types of funding. These are platforms. I do want to note that if you are a current business owner and you are looking for additional PPP funds, our partners at CDFIs, Axion and CRF are still offering funding. So are the community banks and the large banks. But we also have online partners that are part of the Responsible Business Lending Coalition with Lending Club and Funding Circle, who also offer PPP loans as well. So they're not all bad. And there are payment vendor loans, who I alluded to earlier. It's like a Square and a PayPal. Again, this is, if you are looking at a payment vendor loan, cannot stress the importance of looking at your financials, learning how to review that before you even take them on, because you need to make sure you have the ability to make those loan payments, because they can have short terms. And if you don't make those payments on time, it can result in high fees and even higher interest rates. The challenge with payment vendor loans is you may not be able to renegotiate the terms as you would if you went to a CDFI, community bank, or a credit union. Again, it's that personal relationship that you may have versus your vendor relationship. You may not be able to renegotiate those terms, especially with SBA loans. You can renegotiate the terms on an SBA loan and modify them. You may do that on other loans as well. You may not be able to do that for payment vendor loans. There's online cash flow lenders. Be aware of this. We see this a lot. Business owners come in for help from an SBDC. When they look at their finances, they've realized they've gotten into a loan with a cash flow lender where they're deducting $200 every Tuesday because they gave them permission to do that. They gave direct access to those lenders to deduct. The problem is they may deduct even if you have no revenue for that week. Now think about it. We're in a time of a pandemic, businesses shut down. And if there is a business owner who got into an online cash flow product, they could be having deductions from their accounts even with no sales. So again, be very cautious because there is opaque pricing, it's not transparent, and there could be high interest rates and prepayment penalty fees. And the last one, again, if you hear anything with merchant, you really want to take a serious pause. These are merchant cash advances are known as the payday loans in the lending industry. The payday loans for small businesses are known as merchant cash advances. They take a % of your sales daily, not weekly, daily, until that loan is paid back. Plus they'll charge you a premium. Plus they may charge you, if you think you want to pay it down, guess again, there's going to be prepayment penalty fees as well. This, again, we're not saying that you should or you shouldn't. As a nonprofit, we can't advise on that. We're just providing this education. The best way to know if any of these may be proper for you is to know your finances and work with an SBDC. It is not, though, I can tell you, merchant cash advances are not for most small businesses. If you are thinking about that, I do encourage you, please work with Tamara and Lauren and Rebecca and even, I think Bernard is on here. Just make sure that you're working with an SBDC to get the proper guidance in reviewing your financials. There's also predatory brokers. They are in the underserved areas, and I meet so many business owners who think the brokers are lenders. In-person financing, loan brokers are not lenders, and it really is one of my pet peeves. My colleagues tease me about this, but I get really upset because when I go onto some of these loan brokers' site, do you know what they're peddling? They're also peddling merchant cash advances. So loan brokers are not lenders. They shop your loan around. They may match you with a lender who is a CDFI or a bank, but they also may match you with an online company for funding. It's like your mortgage broker. They get their money from banks. The big banks pay them. They do, in referral fees. They also get funded and they earn their money by a fee for the small business owner. They'll charge you, the owner, a fee or percentage of your loan when it's time to quote unquote close the deal. Now, we're not saying don't use brokers. Some have used them because it's expedient, but brokers are only as good as the network of lenders that they can shop your loan around to. The problem with loan brokers, again, a lot of small business owners and a lot of them who are in the underserved, disinvested areas think that the loan brokers are lenders because they are posting their partners, the lending partners site on their website. They're sharing their logos. It's not the same. Their fees are unregulated and can be as high as 20% of your loan. That means if you're looking for $10,000, they get paid by the bank. Then they ask you for $2,000. You wind up with only $8,000 because they charged you a 20% of your loan. It is not unusual, and it actually is normal practice to have a third-party agent, but it is predatory for that third-party agent to charge you more than 5% of your loan. It really is. And so we want to let you know that that's actually been addressed, in California legislation. And we at Small Business Majority, with our federal office in Washington, D.C., have been trying to address this since the Obama administration. We were unable to get that passed due to a deadlock Congress, so we're hoping with the next administration, this will be changed. It is disproportionately impacting owners of color. This is just the Responsible Business Lending Coalition that Small Business Majority is part of. We are one of 7 founding member organizations for the Responsible Business Lending Coalition, Axion being one of them, and 4 or 5 other lenders, as well as a think tank, Aspen Institute. But we are the only, Small Business Majority is the only nonprofit organization that represents the borrower, not a lender, but we represent the borrower and the small business owner on this coalition that we helped to found. This is just a checklist. This will be in your handouts that Lauren will send to you. What do you want to look at? I'm also going to send you a checklist about what to look for predatory lending during COVID-19. So in addition to this, I'll also send you another checklist about predatory lending during COVID-19. Visit our venturize.org. We have a great checklist on getting loan ready. This was developed by the Association of CDFIs and then transferred over to us to build out even more. And we created this into a really robust online system of free resources for small business owners. I want to go over crowdfunding really quickly at a glance, because that's another option. I went through the buckets for financing for big banks, CDFIs, community banks, number 3. Number 4 is credit unions. Number 5, the good online lenders. Work with SBDCs, of course. If you are looking at that, recommend that if you're starting off, it's best probably to work in person to build that relationship. Then I'm going to go 6, crowdfunding at a glance. This is when you reach out to people to raise that capital. You use a platform that will take on a fee, average of 3 to 10% of the money raised. But I do want to say a quick takeaway is you need proper planning and follow-up time. It is time intensive to do a crowdfunding campaign. Okay, it is time intensive. These are the 4 types of crowdfunding types of campaign that you would engage in: donation, rewards-based, equity-based, or lending. It is not for everybody though, and it's not for every business. Who here has more than 2,000 people on their LinkedIn and Facebook combined, or Twitter? Lauren, I'm curious, who says, if anybody has that, can you type in me or I do? You have more than 2,000 contacts on LinkedIn and Facebook and Twitter and Instagram combined?
Stephanie and Alicia both.
Okay, Stephanie and Alicia, you are already one step further ahead in the criteria for maybe being likely for a form of crowdfunding. When I said it is time intensive, you also need to have existing social networks. If you do not have a very strong and robust social network of at least 2,000 people who can help you spread the word and build up momentum to raise funds for your business, it is going to be very difficult to meet your business goal for raising money. So again, work with the SBDCs. Finally, in closing, I also want to talk about credit. This is, again, we are in a time of uncertainty with COVID. Many are applying for lines of credit, credit cards, and loans. Be aware that that is having a hard pull on your credit. If some of you are current business owners and already applied for an EIDL loan with the SBA, that was a hard credit pull, even though, you know, they relaxed the criteria of collateral and such. That is a hard credit pull. So in this time, in the next year, mind your credit. These are the 5 C's of credit here. Know that the 3 major credit companies, Experian, TransUnion, and Equifax, are offering free credit checkups through April of 2021. Otherwise, you would have to pay it's free once a year. Otherwise, you pay for it to be checked more than once. This time, through April 2021, they're actually making it free throughout the year. And this is just what you need to know about credit. Again, it's difficult to make payments sometimes, so negotiate with your creditors during severe economic upheaval. As long as you make the minimum payment on your current debts, it will not affect your credit score. But debt utilization does. Have a lot of business owners saying their credit score has decreased because they've had to extend use of their credit. Oops, sorry about that. And this, actually, I want to highlight here, credit new inquiry checks. 10% may not seem a lot, but when you apply for one loan and another loan and another loan because your back is against the wall, that can bring your credit score down, and it may not recover for 6 to 8 months. So before you find financing during this time of COVID, ask them, will you do a hard credit check? And it is worth your while to just check on your FICO, F-I-C-O credit score. That is different from your Credit Karma score or any other. If it is not from one of the three companies, make sure you know your FICO score, not the Vantage score. The Vantage score is the feel-good score. You want to know your FICO score. That's going to give you leverage negotiation in finding financing. Knowing your credit is going to help decrease your expenses, save money for your own home and business, access capital and credit, but also it can be difficult sometimes. So it'll help you increase your financial well-being and mental wellness as you grow your business. So for the next steps, just make sure you sign up with free training with Urban Juncture, Bill Bronzeville, SBDC, Greater Engold, SBDC. You can go on our website for free resources. You can also find out where you can go for any SBDC or WBC on our website, venturize.org, as well as the loan checklist. Some questions here, but I'll get to questions first, but I actually want to put up the contact for appointments for Lauren and Tamara at Bill Bronzeville and the SBDC at Bronzeville. I think we have a few minutes left as well. So if there's any questions for myself or my colleagues at the SBDCs, welcome to take them right now.
I have one that's in the chat. And then after this one that's in the chat, we can just, you can unmute yourself and ask. But the one that's in the chat says, is about business credit, because I always hear of building your business credit. How does that work?
So business credit is not the same as your FICO credit score. One, business credit, unlike the FICO score, which is consistent calculations with fairly same formulas that they're using with the three major credit companies, it's not the same by different companies. Second, not all banks will take business credit. Third, even if a bank does take business credit, sorry, I almost said Christmas credit, I don't know why, but even if a bank does accept business credit, they will always look at your personal credit score, your FICO score, primarily. Even if you're a $4 million business, even if you're a $10 million business, because you are your business. I've gotten questions in the past of people who have had, challenges in managing their personal credit, that it's not fair. They want a lender to look at their business credit. Well, only to discover the reason why they have had problems with their personal credit is they declared bankruptcy. If you have declared bankruptcy, please know that the CDFIs that are our partners and that we discussed earlier, such as Axion, CNI Microfinance, and such, they will work with you, and they will not have the same criteria in terms of considering your bankruptcy as a community bank or a large corporate bank would as well. So please don't feel that bad credit is something, personal credit, FICO score is something that should be a barrier to accessing the capital that you need. But also the other point I wanted to make about business credit, not all businesses use that. It really depends on the industry as well, especially if you're in suppliers or you need those materials and such. It's not necessary, nor is it considered necessary by funders, depending on your industry too. So I hope that helps understand business credit. It is incredibly important if you do need it. For instance, if you are a construction company and you need to front the money up front for materials, you're going to need that business credit because they're going to want to see those receivables. If you have contracts and procurement and you need to draw down on business credit, that's having good business credit and paying those down for the debts that you incur for those materials, vehicles, supplies, what have you. That's going to build up your business credit too. So the same principles when you do build up your business credit for those needs of drawing down on those lines of credit for your business is going to apply.
I just want to add one thing to that, and very pleased if I say this incorrectly, correct me. I think a good way, Jay makes a very good point about your personal credit still, especially for micro business, being key, particularly if it's, retail or service driven or something like that. I think a very good way to think about it is that business credit, the priority for business credit would be, as Jerry said, more for your suppliers, right? Or the ability to work with suppliers and vendors versus personal credit is going to be more so king when looking for financing, right? So to kind of think of one lane as being able to get financing and loans and such, and another to be able to work with other, work with vendors and suppliers and for them to be able to provide money for supplies and things like that.
Yeah. And also in the end, even, one is for the personal credit for any business, they're going to want to know your global capital. If something were to happen, like it's a good example again, the pandemic, what are your other sources of income that you have to pay back this debt? Given that you may have student loans, given that you may have a mortgage, what are your other sources of income? And on top of that, what is your credit like as well? Because that's going to be an indicator on paying down your debts for the lenders and those who are funders. Do we have another question, Lauren?
Not in the chat.
Yeah. I think we have time for one more. I'm going to stop sharing so I can. Oh, I don't see anybody. Okay.
If anyone wants to ask a question, like I said, the floor is open. Just take yourself off mute. Anybody? Anybody? Okay, I'm going to do a going once. Going twice.
Well, if anybody found this helpful for you today, if you could let Lauren, Tamara, and I know how you found this today. It helps us to improve what we are trying to train and educate to have a stronger business owners of color and businesses, small businesses in our neighborhoods in Chicago and greater Chicago area. So if you have any comments on today's presentation and training, let us know. And please note that this isn't a one-off. This is meant to help supplant your counseling and training that you receive at the SBDCs.
Correct. I have one more question that popped up in the chat. Is it a bad time for new businesses to apply for grants and loans because of COVID?
No, I don't know what grants are existing for new businesses. I think I saw something to help spur economic commerce. I can't remember what industry that was. No, it's not a good time. I mean, it's not a bad time, so long as the funders have the funds to give out. And we've always said they have money, and your financials are in order. I think I do want to say at this time, though, you should have your financials in order because we've been trying to support the small businesses who've been suffering due to COVID, and most especially with many who are going to rebuild after the last 2 weeks due to outlying actions from the protests. There may be some funding that's going to be set aside from many of those who normally provide financing. So they may be more outside of the CDFIs. Community banks and credit unions are going to be looking more and more at your financials, which they always do, but the flow of capital may be a little bit more slowed down at this time. It hasn't stopped, it's just slowed down. So just make sure that you have your ducks in order and such. For grants, I really recommend the same thing. Grants are not just given out randomly in general, unless it is a time of emergency. But even for grants, you do need to, people want to know that they gave you the money in good faith and that you have the ability to manage it well. And I'm not talking, under $5,000 grants. I'm talking, $5,000 or more for those grants. So you just make sure that you, your financials are in order and that you're reading them properly or learn how to read them. And of course, go back to your business model and you know, and business planning to make sure that it's a good time to even start up your business in this environment. I really want to caution that because we don't know what commerce is going to be like. So it isn't just your business financials, but go back to your business model and look how economic conditions are going to impact a new business.
Yeah, agreed. Well, Terry, thank you for a great presentation and wealth of information. As we mentioned, you know, please reach out to either Bill Brownsville or Greater Inglewood SBDC for, you know, if you don't already have your one-on-one advising session scheduled, so that we can help you continue to go, you know, to build on this information, right? One of the things that came out just as how critically important and how kind of behind a lot of our businesses are through COVID was regarding specifically financial preparedness. So not as far as how well funded they are, but like how well just your financial house was in order from a documentation standpoint, records, you know, forecasting and etc. So that is why we are here. Okay, Jerry, thank you again. Everyone, thank you for joining us. We had a long session. This is our first session of more than an hour, but I think it was a lot of very good information that tied in closely together, so I wanted to be able to capture it as much as possible all in one session. Again, we have 2 more presentations left or webinars left in the Road to Recovery series. Next week is legal, including, like I said, your legal entity setup, but it's going to be that plus more. That's next Wednesday at 2 o'clock. Earlier, I dropped in the chat the registration link for that, as well as the following Wednesday, the 24th. We're going to close out this series with creating a strong, powerful mindset to persevere in business. So with all the things that are going in, Jerry actually had it in towards the end of the first part of the presentation slide, that making sure we don't forget about ourselves in all of this, right? There's a lot going on, and your business can only survive and grow and flourish to the extent that you are well and you are well taken care of. It's going to be one that's focusing more on, you know, mindfulness and mental health from the standpoint of being an entrepreneur. So it's a great session you don't want to miss out. You can go on the eCenter Direct under the Illinois SBDC under either Greater Inglewood or Bill Brownsville to register. Unless anyone has anything else, I bid you all adieu. Thank you very much. Enjoy the rest of your evening. Be safe. Bye.